we detected an unusual trade worth $105 million on DoorDash stock, ticker symbol DASH, dash. And what's very interesting is that this unusual option activity came after the stock dropped about 14% following its earnings report. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying the dip in anticipation of a recovery, or bearish and selling into this weakness after the earnings crash. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better financial decisions. This is how smart money always stays one step ahead before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trade happened on May 9th at 11:35 at the 35-second mark for these June 20 options at the 180 strike calls and the September 19 options at the 165 strike calls. Now, we already analyzed this data and figured out that this wealthy investor was closing out these June 20 options and rolling them down to a lower strike price with a later expiration date. This means that these September 19 options are the new open trades. Since these are for the same options, we can add up the quantities: 24,000 plus 9,000, which equals 33,000 contracts in total. And so to estimate the cost of this new trade, we multiply the total number of contracts by the price. We can see both trades were executed around the same price of 31.82. Now remember, options are priced per share, and each options contract represents 100 shares of stock. So we multiply by 100, or simply move the decimal 2 places to the right. That means each contract costs $3,182. And so when we multiply this all out, we get a total of $105 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to smarter, lower risk trades with a higher chance of profit, head over to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we used position sizing to manage our risk. As you can see here on the options chain, for the September 19 options at the 165 strike calls, since this was a new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position. Now, how did we know these were new opening trades? Well, we can start by looking at the current open interest, which shows those 33,000 contracts now opened. And so, if this wealthy investor opened new trades, then the open interest should have been lower before these unusual trades were made. So let's check the historical data from May 8, the day before this unusual option activity appeared on May 9. And so, looking at the September 19 options at the 165 strike calls, the open interest was only 92 open contracts. Clearly, this is less than the 33,000 contracts currently opened. So this tells us that this wealthy investor just opened new contracts on May 9, because it would not be possible to close out 33,000 contracts if only 92 contracts were opened on May 8, the day before. This data is very important to figure out because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, like in this case, it could signal an opportunity for us to start a new trade. And so, based on our deep research across multiple variables and other data sets, this wealthy investor bought these 165 strike calls for 31.82 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line as the share price goes down, this trade becomes more negative loss. And as the share price goes up, this trade becomes more positive, more profitable. Because this wealthy investor is going long bullish on DoorDash stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $165, the stock needs to trade above $196 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. Let us know in the comments. Do you think DoorDash stock will recover? Are you buying? Or is it time to sell? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a great day.